So, hello guys. Today we are going to talk about the working capital cycle. Working capital cycle, continuation of what we were doing, uh, what we did in our previous class, lesson one. So, lesson two is about working capital cycle, and we are going to define the working capital cycle in two ways. So, number one, as a manufacturing business, and number two, as non-manufacturing business. So we shall have two definitions: one as manufacturing business, and number two as non-manufacturing business. So let us define them. So for manufacturing business, when we talk about manufacturing business, it refers the time taken to convert raw material into finished goods. Sorry, time taken to convert raw materials into work in progress, then work in progress into finished good, then finished goods into the credit sales, then credit sales into cash, and the time the cash is used to pay creditors. So that is the definition of working capital cycle under manufacturing business. So from raw material until we pay the creditors. So from the raw material until we pay our creditors. So it refers to the time taken to convert raw material into work in progress to finished goods into credit sales into cash, and the time the cash is used to pay the creditors. That's number one. Number two, we have the non-business. So for non-business, we buy goods for resale. So remember, for non-business, we buy goods for resale. Now, in this case, we shall not have the raw material and work in progress. We shall have the finished good, because when we buy goods for resale, we buy already completed goods or finished goods. So we say definition of working capital cycle and non-manufacturing business and non-manufacturing business. So refers the time taken to convert the finished goods into credit sales, then credit sales into cash, and the time taken uh, to use the cash to pay the creditors for the supply of the finished goods. So that's the two definition. That are the two definition. Let's write them down. Let us write them down. So as you can see, we have the two definition. So the definition number one is under manufacturing business, and definition number two is under non-manufacturing business. So we have two of them. So one under manufacturing, and the other one under non-manufacturing business. So under manufacturing, we start from the raw material. So time taken. Remember, we are talking about time. So we talk about manufacturing cycle. We're talking about the time taken. So before the time taken to convert the raw material into work in progress, work in progress into the finished goods into credit sales, and then credit sales into cash, and the time taken to pay the suppliers or the creditors in that case, for number one. And then for number two, we have the non-manufacturing business cycle. For non-manufacturing business cycle, refers the time taken to convert the finished goods into credit sales, then credit sales into cash, then the time taken to pay the suppliers of those finished goods. Remember, time taken to pay the suppliers of the finished goods. Reason why? Because we purchased maybe on credit from the suppliers. So we have those two definitions. Now, we need to come up with some formulas. So formulas. So we start with number one, A. I will call it A purposely. The data A, and I know the reason why I'm calling it A. So we start with the raw material turnover. Raw material turnover. Raw material turnover, and we say it is the average stock of raw material. Average stock of raw material times 365 or 360, depending. So it can be 365 or 360. Usage of raw material. Usage of raw material. So remember, usage of raw material is the same as purchases. So usage of raw material is the same as purchases. So usage of raw material is the same as purchases. Number B. Talk about work in progress turnover. Work in progress turnover. So remember, in this case, it can be 365 or 360 depending on the question. So it can be 360 or 360. So it can be the 65 or the 60. So number of days in a year. So depending on the question. Number 2, average stock of work in progress. Average stock of work in progress times 365 or 360. You divide it with what? Cost of sales. Cost of production. Cost of production. So kama cost of production haiko, use cost of sales. In case the question does not have cost of production, use cost of sales. So but if this equal, use this cost of production. Kama zote ziko, so kama swali nimekupatia cost of production and cost of sales, use cost of production. But kwa swali kama cost of production haiko, cost of sales iko, use cost of sales. Number C, finished good turnover. Finished good turnover. And we say it's the average stock of the finished goods. Average stock of finished good times 365 or 360, depending on the question, or 360. Then you divide with cost of sales. Now this one is cost of sales. Number D. Number D, you can go to data turnover. Data turnover. Data turnover, and we say average data. Average data over credit sales times 365. So that is credit sales. So average data over credit sales. So that's the data turnover. And then we have E. We call the credit turnover. Creditors turnover. E. Creditors turnover. Creditors turnover, which is the average creditors. Average creditors times 365 or 360. And this one goes with credit purchases. Credit purchases. Remember I said that usage. Remember I said usage. Usage of raw material is the same as purchases. Usage of raw material is the same as purchases. So usage of raw material is the same as purchases. Now we need to determine how to determine operating cycle. Operating cycle. Operating cycle. Now operating cycle is equals to A plus B plus C plus D. So A plus B plus C plus D. Ndio hapa. So raw material plus work in progress plus finished good plus debtors. Natupatia operating cycle. That one will give us the operating cycle. That one will give us the operating cycle. Operating cycle. And then number 2, cash operating cycle. Cash operating cycle. Operating cycle itakuwa ni operating cycle. Operating cycle minus E. So E. So operating cycle minus E. Operating cycle minus E. You can go to a past paper. Operating cycle minus E. Operating cycle minus E. So nitakuwa nifanye maswali on this side. So I'm not going to delete this part. So we start with the first question. April 2023, question number 5C. So April 2023, question number 5C. So April 2023, question number 5C. So April 2023, question number 5C. April 2023, question number 5C. So open that question. So let me read the question. So the question reads, so April 2023, question 5C. The following financial statement relates to Bamako Ltd for the year ended at 1st December 2022. So we have the inventory at the beginning and at the end. We have the trade payables. We have the credit. We have trade receivables, trade payables, and we have cost of goods sold. So the number of days on Bitambia is 365. That one is okay. So required, compute the operating cycle. Now operating cycle. Now operating cycle in this case tunaanzia hapa. So this question here tunafanya haina raw material na haina work in progress, iko na finished good. So our question start from this point. So kumaanisha our operating cycle itakuwa ni C plus D peke yake. Reason why amesema operating cycle, so itakuwa ni C plus D. Reason why, because we have the inventory. Now this inventory is assumed to be finished good because we don't have the raw material. Hawajatuambia kuna raw material, hawajatuambia kuna work in progress, but wametuambia we have the raw material. That raw material will be categorized as finished good. So we are going to start from here, finished good. So we compute C, finished good turnover, finished good turnover. So average stock. So we need to take the average. So the opening, we have the opening and the ending. So the opening is 4,000. So we compute the average stock. Average stock 4,000 plus. So unachukua the beginning plus the end. We divide by 2. So 4,000 plus 4,600 divided by 2. This is 4,300. So 4,300 times 365 over we divide it with cost of sales. Now cost of sales ni pale chini 40,000. 40,000. So number of days itakuwa ngapi? 4,300 times 365 divided by 40,000. This is 39.2 days. So 39.2 days. So 39.2 days. So tunasema ni approximately 40 days. We cannot have an half day. 39.2, which is approximately 40 days. We cannot have an half day. So we cannot have an half day. So that's number C. Then you can compute this credit turnover. D. Credit turnover. Credit turnover is average creditors. Now in this case, hii swali yetu ukiangalia, the credit sales tumepatiwa iko credit sales ni ile pale inaitwa trade payables. So that is the okay, ni tunatumia tena data. So data. So supposed to start with the data first. Ndio D. So data turnover. So ukiangalia, we need to find the average data. Now in this question, we have been given trade receivables as one figure. Now ukipatiwa kama one figure, that is the average. So ukipatiwa for one period, just know it's the average. Ukipatiwa for two period, you need to add the two, you divide by 2. But ukipatiwa ya one period, remember, ukipewa ya one period, for example inventory tuko tumepatiwa inventory. Ukiangalia inventory tuko tumepatiwa ya opening and ending. So ukipatiwa hivyo lazima you add the 2, you divide by 2. You add the 2, you divide by 2. But ukipatia kiwa moja hivi, so kama trade receivables umepatia 5,000 hivyo. Now that 5,000 is the average. So 5,000. Hii imekata kuandika 5,000 times 365. Now the debtors, so we are supposed to divide it with the credit sales. Now credit sales ni 50,000. 50,000. So 5,000 times 365 divided by 50,000. That's 6.5. That is 6.5, which is approximately 37 days. So we cannot have an half day. Then ya E, tuzamazia E, the creditors turnover. turnover. So we are supposed to start with the average creditors. Na pale tuko nayo payables. So that's the payables. So ni moja. So kama ni moja unachukua venye iko times 365 over, you're supposed to divide it with the credit purchases. Now you're supposed to divide it with the credit purchases. Do you have the credit purchases? We can compute. So let's compute the purchase, the credit purchases. So what's the formula? So tunajua cost of sales. So we know that cost of sales is equals to opening stock plus purchases minus closing stock. Now we have the cost of sales. So we have the cost of sales, which is 40,000. 40,000. We have the opening stock, ilikuwa 4,000. We need the purchases. Then the closing stock is 4,600. Now find the purchases. So purchases itakuwa 40,000 minus 4,000 plus 4,600. So what will be the purchases? What will be the value for the purchases? So 40,000 plus 4,600 minus 4,000. 4,600. That will be 4,600. Now, these purchases are to come on credit or on cash. Now, in this case, because we are talking about the working capital, when we talk about working capital, we are talking about mostly the credit part. Now, we shall assume all these are on credit. So, it's a credit purchases. So, tutakuja tuweke hapa 4,600. Let us find the number of days. So, 3,400 times 365 divided by 4,600, 30.5. Which is approximately 31 days. So now we can find the operating cycle. So operating cycle. So operating cycle ni finished good plus. So ni 40 plus 37, which is 77 days. And then number 2, cash operating cycle. Cash operating cycle is 77 minus 31, which is 77 minus 31, which is 46 days. So that is all that you are required to do. That is all that you are required to do. So that's all you are required to do. I think tumemaliza. Hiyo tumemaliza hivyo. We can go to another question. The next question is question for November 2016. So imeappear twice since 2015. So November 2016. So November 2016. Question number 3B. November 2016. Question number 3B. November 2016. Question number 3 boy. So let us read the question for November 2016, question number 3B. November 2016, question number 3B. The question reads, the following information was extracted from the financial statement of manufacturing company. So we have the information there. Now required the operating cycle in days. And number 2, the amount of working capital required. So the amount of working capital required. So amount of working capital required. So we'll start with the first one. We start with the first one, the number of days. The number of days. So tuanze na the first one, pale juu. So tuanze na the first one na hii ya kwanza, the raw material turnover. So raw material turnover. So I can see part A pale juu kwa swali yetu kuna mahali ametuandikia value of the average stock maintained. So tukianza we have the average, we have the raw material, that's the average raw material. So tuanze na A. So mimi nitakuwa nikisema A. and I just do it direct. So nikifanya A, just know A is the raw material. So we start with the average raw material, which kwa sababu inaona ni 32,000. 32,000 times, we are supposed to multiply with the number of days ni 365 over the usage. Nilikwambia the usage represents the purchases. I told you that usage is another name of purchases ama consumption of raw material. So consumption of raw material. So usage of raw material is the consumption of raw material. The other part is so we have it for 40,000. So for 40,000, so consumption of raw material is the usage for 40,000. You can see the word usage of raw material is the same as consumption of raw material or purchases. Or purchases. You can also use the word purchases. So to find it, 32,000 times 365 divided by 40,000. So we apply 26.5. So 26.5, which is approximately 27 days. Number B, work in progress. We have work in progress, yes. We have average work in progress as 35,000. As 35,000. Work in progress need 35,000. 35,000 times 365 over. Now work in progress is not a cost of production. So do you have the total cost of production? Yes, we have it. Naona wanasema ni 1 million ama 1 million. So it is 1 million. So 1 million. So let's do it. So itakuwa ni 35,000 times 365 divided by 1 million. 12.7. So 12.7. So we don't have an half day. This is approximately 13 days. Number C, finished good. Do you have finished good? Yes, 26,000 average. So the average is 26,000. 26,000 times 365 over. Now for finished good na cost of sales. So cost of sales pale nikiangalia ni 1050,000. 1050,000. So 26,000 times 365 divided by 1050,000. 9.0. This one is 9 days. Now tukitoka number C tunaenda number D. Data turnover. Do you have data? Are they operating with the data? There is no data in this case. There's no data. But pale chini tumeambiwa the average credit allowed. So we have the credit turnover. Number D. Credit turnover. Now already washatupatia answer. So no working required. So this require no working. Is E. So hakuna D. So D hakuna. Data turnover hakuna in this case kwa sababu tujapatiwa the value of data. But tumepatiwa the number of the credit allowed. So the number of credit allowed is the credit turnover, which is 16 days. So kumaanisha D ni 0. So D tungeweka tu. D is no working, which is 0 days. So hiyo hakuna. We do not have data. So the company does not operate with the data. Now number 1 anatuambia require number 1 the operating cycle. So operating cycle kama kawaida. Operating cycle itakuwa ni 27 plus 13 plus 9 plus 0. Itakuja ngapi hiyo? Hiyo itakuja ngapi? So 23 plus 13 plus 9. Mimi napata 45. So 26 or 27 13 9 wanasema kuna debtors. Let me see. Debtors hakuna. Kuna average debtors. Let me see. Average debtors. Oh, iko huko juu imejificha. Ya kwanza kabisa huko juu. So we have the average debtors ya 48,000. So that one requires a working actually. So we have the average debtors huko juu. So wameificha sana. So number D, we need to do it. So average debtors huko juu tukianza 48,000. 48,000 times 365 over. Now for debtors na credit sales. So credit sales kwa swali yetu pale ni total sales 1600. So the sales will be on credit. We are going to assume the sales are on credit because that is the only assumption we can make. So 48,000 times 365 divided by 1600. So 10.95. So this is 10.95, which is approximately 11 days. So 10.95, which is approximately 11 days. We cannot have enough days. So and then E tumepatiwa already. So E, we know it is 16 days. So pale chini it will be 16 days. Let me confirm. Yes. Now let's find the operating cycle. Operating cycle. Operating cycle. Itakuwa 27 plus 13 plus 9 plus 11. Then cash operating cycle. Cash operating cycle. So itakuwa hiyo ya juu. Let us add 27 plus 13 plus 9 plus 11, which is 60. Then 60 minus 16. 60 minus 16, which is 44 days. So 60 and 44. So 60 and 44. 60 and 44. Those are the days. Aya. Now we can think about working capital. Now working capital required. So working capital required. Remember working capital number B. Working capital is equals to total current assets minus total current liability. So total current assets minus total current liabilities. So total current assets ya kwanza ndio hii 32,000. Hiyo ni raw material, which raw material inventory. So inventory. So in inventory, also this one forms inventory part. So tuna total current assets inventory. Also this one is inventory, finished good. And then you have one inventory, another current asset which is debtors, 48,000. 48,000. Then we minus current liability. So what will be our current liabilities? I think that one we need to compute. So we need to compute that one. So we need to compute the current liability, this one. So how do we compute it? So we compute from this one. So we know we know that the credit turnover is 16. So we know the credit turnover is 16 days, which is equals to 16 days. So credit turnover is 16 days. We want the average creditors, which we don't know. Average creditors. So that is what we need. Times 365. Times 365. We divide it with the credit purchases. Now, do we have purchases? Kwa side yetu? Purchases. Tuende huko juu purchases. Purchases. We need purchases. 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 So tunajua, so tunasema ni hapa 16 days is equal to the average creditors which we want. And this is over credit purchase. No, credit purchases. Precisely, there's another name of usage. No, it's another name of usage. So usage in the yapa raw material, which is for 40 now, for 40,000. But remember, we have another raw material. So we have a raw material per average stock. We can apply 32,000. So we add the 32,000. So we add the 32,000. But I think it is not necessary. Tufanye tu na it is not necessary. Hapo. So we can get the average creditors. We can get now the average creditors. So that average creditors is what itakuwa our total liability. So itakuwa ni for 40,000 times 16 divided by 365, which is around 19,000. So average creditors in this case 19,288. Tunakuja unaweka hapo 19,288. So when you get the difference, the working capital required. So when you get the difference, so 32,000 plus 35,000 plus 26,000 plus 48,000 minus 19,288. This is 121,712. So that is the average. So that's the working capital required. So that is the working capital required. That is the working capital required. Working capital required. So we have another questions. Other questions. Let me write them down. So this is a kitambo. You can check from your revision kit May 2012. Question number 3C. June 2011. Question number 1. December 2009. Question 3. December 2007. Question 4. June 2007. Question number 1B. So this one is under FM revision kit. The old one. You can find the question there. So FM revision kit. And they have the answers, so can help you a lot. So I think that is all about our capital cycle. Maybe we look for another question, but those that I have done, they are enough for revision. So let us do the question for May 2012. So May 2012. This will be a good question, and it will be our last question actually. May 2012. May 2012, question number 3C. So May 2012, question number 3C. So utafanya hii. So the rest you can check. So May 2012, question number 3C. So let me read. The finance manager of Christmas Enterprise has given the following financial estimates for the year ended at 1st December 2012. So we have the estimates. Raw material are 80% of the cost of sales. All are on credits. Require number 1, cash operating cycle. Now cash operating cycle. So we need to determine the operating cycle. Then we less the E. That one is okay. Now, from the question, we have the raw material. So the raw material balance at the beginning, or the average. So tuko na moja tu. So that one becomes the average, which is 150. So ukiangalia kwa hiyo swali, mimi naona ni 150 or 150. Tutaanza na hiyo 150. We divide it with usage of raw material. Now, in this case, we don't have the usage because ametuambia pale chini that the raw material is 80% of the cost of sales. So we need to determine cost of sales. So we need to determine cost of sales first. So we start with the cost of sales. So cost of sale is equals to opening stock plus purchases minus closing stock. So opening stock plus purchases minus closing stock. Now Alafu pale juu kuna maana ametuambia that gross profit margin is 25% of the sales. So kuna maana ametuambia hapo that gross profit is equal to 25% of sales. What does that mean? It means that cost of sales is 75% of sales. So cost of sales is 75% of the sales. Now tuanze na cost of sales. So cost of sales itakuwa 75% of the sales. Now what's our sales? Now our sales is now tuambia total on credit, that's 600. 3,600. So multiply. So itakuwa ni 0.75 times that 600, which is 2700. 2,700. 2,700. So kumaanisha tukirudi kwa formula yetu hapa juu itakuwa ni 2,700 is equals to our opening stock. So what's our opening stock? Our opening stock itakuwa ngapi? Lakini ukumbuke either way, hata before tufike hapo umetuambia pale chini raw material is 80% of cost of sales. Now raw material, which is the usage, ndio hii hapa sasa, the usage of raw material pale chini umetuambia is 80% of cost of sales. Even you don't need other workings, hii imetutosha hivyo. So you don't need other workings. So itakuwa ni 80% times 2700, which is 2160. Which is 2160. Now we can get number one, number A, raw material. Now raw material is the average stock of raw material, which is 150,000. 150. So tutaweka 150. So tutaweka in form of 150 times number of days in a year. Wajatuambia, so we use 365 or 360, whichever you want. Over usage day 2160. So 150 times 365 divided by 2160. 25.3, which is approximately 25 days. Number B, work in progress. So work in progress, we need the average work in progress. So the average work in progress to now as 350. Cost of production, do you have the cost of production? Cost of production. Now cost of production hakuna, so tunaenda na cost of sales. Tunaenda na cost of sales. Sawa sawa. So ni 350 times 365. So hakuna cost of production. So we go with the cost of sales. 27. And so 350 times 365 divided by 2700. 7.3 is approximately 48 days. Number C, we have the finished good. Now finished good pale tunaona ni 200. Finished good naona ni 200. Now over hii inaenda over cost of sales, so you direct. That one goes with the cost of sales. So tumaana ni work in progress kwa swali, work in progress 200. So 200 times 365 over cost of sales. Na cost of sales ni hiyo bado 2700. So 200 times 365 divided by 2700. 27 days. Number D, debtors turnover. Ikienda kwa debtors turnover, debtors. Do you have debtors? Yes, we have receivables 306. So 306 times 365 over debtors chini yake ni credit sales. Now do you have the credit sales? Now all sales were on credit, so that's 600. So all the sales were on credit, that's 600. So 306 times 365 divided by that 600. 31 days. Then ya mwisho tukimalizia credit turnover. So we have the average creditors, which is payables, which is 130 times 365 over the credit purchase. Now credit purchases ni usage, so credit purchase ni usage. So unakuja hapa kwa usage, unaangalia usage 2160, that is the usage. So 130 times 365 divided by 2160, so which is 21.9, which is 22 days. So I think that one is okay up that point. That one is fine up to that point. So I think there is no any question. I think there is no any question. Oh, so good. So you can find the operating cycle now. So operating cycle ni ngapi? 25 plus 48 plus 27 plus 31. So 25 plus 48 plus 27 plus 31, 131. Then we have the cash operating cycle, 131 minus 22, which is 109 days. So I think those are enough for this topic. So we shall meet under lesson 3. So we meet for lesson 3 when we shall be talking about so we talk about the, let me check the next one yenye nitaenda let me see kidogo tu prediction of working capital requirements. So we shall do prediction of working capital requirements. So that's the next topic, the next lesson of this lesson. Prediction of working capital requirement, of working capital requirement. Prediction of working capital requirement, that will be our next topic. Prediction of working capital requirement, that will be our topic. So for now, let us call it an end. We meet for that one later. Goodbye.